What type of business structures are available when starting a company in China, and what structures would you recommend based on our business? Now, in this video, I'd like to talk about this question, which is a very frequently asked question by our viewers here on YouTube and social media. So let's just get into it right away. As you can see on the screen, guys, here, when you're starting a company, you have multiple options with regards to structuring your China company. Now, first one, if you pay attention here, I would like to talk about something called FICE. You can see in the middle of the screen here. And FICE is, it stands for Foreign Invested Commercial Enterprise. Now, when you browse around Google, you come across all this bunch of nonsense articles which were written back in 2010 or 2012. And the resources are also very old, so-called companies, like agencies who help foreigners, register companies here. But again, the highlight, the emphasis here, those resources are pretty old. Back in the day, in 2010, 2009 or 12, etc. So like almost 15 years ago, that was the concept. Okay, there were two different concepts. One was called FICE, Foreign Invested Commercial Enterprise, and it had differences from what we call WFOE. WFOE stands for Wholly Foreign Owned Enterprise, as most of you know. Now, fast forward to 2024. In Chinese legislation, there's nothing called FICE and WFOE. When you approach the company registrar here, there's only one concept, which is called Foreign and Invested Commercial Enterprise. It's translated, but that is the only thing that is known for foreigners. Basically, when you're registering a company, the policy here, the legislation, it only talks about this type of companies. Foreign invested enterprise. And then foreign invested enterprise, you can see here in the chart, it's a broad concept now. It includes all sort of companies that has foreign investment in them. It obviously includes WFOE, which is wholly foreign owned enterprise, meaning, in other words, 100% owned by foreign investors. 100% owned by foreign individuals or companies. Okay, that is the WFOE. That is the meaning of WFOE. And it is inside this concept of FICE. FICE on its own is not a separate entity or separate structure. Maybe it was back in the day, like 15 years ago or 20 years ago, but now it's not. So please don't confuse this concept. Okay, these two concepts, a lot of time people ask us, okay, can I start a FICE or would you recommend WFOE? Now it's not a thing. Okay, in 2024 is not a thing at all. So in 2024, the only type of company you can form is basically LTD company, limited liability company as a foreigner, and then it can be either wholly owned or it can be in partnership with others. So we're going to discuss them now. Now, once again, before we go too further from the topic, FICE is a broad concept, which includes WFOE, as you can see here on the screen, wholly foreign owned enterprise, and also it includes joint ventures. Joint venture, just like in any other country, it's a joint company, joint venture by two or more companies, basically. So it can be like two foreign companies, or it can be one local company, one foreign company, or mixture of both, basically. So it's a joint venture for specific project. They usually form it. And then there's something called partnership, limited or unlimited type of partnership. So partnership can be between individuals as well. And for example, you're a foreign citizen, you come to China, you want to start a company with a local person, and you can start a partnership company. All of these can be limited liability or in the case of partnership, the majority partner will most likely assume unlimited liability. So that is the difference here. And then started from a couple months ago, recently, China introduced something called single person company, and that is below WFOE. It can be 100%, it is actually not, it can be, it is 100% owned by foreign entrepreneurs, and it can be a single person company. Okay. Now, in this case, you don't need a supervisor. You know, in the case of WFOE, there are two positions which are required. One is director, another one is supervisor, that we discussed in different videos. If you haven't seen them, please browse through all of our videos, and then you can find there's a bunch of videos we discuss the structure of the WFOE. That is a traditional WFOE. But now, recently, this new concept has been introduced, which is single person company. You start a company with one single director, and that director usually owns the company. So the owner is actually individual here. And then, however, in this case, there is a risk of unlimited liability. Okay, we discussed this in different videos as well. Please go ahead and watch. So here, so all these like orange boxes, these are the main ones. For the time being, I want you to ignore Hong Kong company and Cayman Islands company here. Just focus on the orange boxes, okay? FICE, once again, the broader concept, which includes all these different types of structures, depending on your purpose, depending on your goals, depending on your long-term business plans. You can choose whichever suits you the best. You cannot start just FICE. FICE is a title now, okay? It's a title. It's basically the category which includes more specific types of structures, which are WFOE, wholly foreign owned. If you are, for example, interested in owning your own company 100%, then WFOE is the best one for you. WFOE can be started in trading, like import and export. It can be started for consulting, business consulting, IT consulting. It can also be started for gym. Can also be started for the restaurant, catering types of businesses. That is wholly owned enterprise. You don't have any Chinese investors here. You don't have local involvement basically by local people, like local companies. But however, in the case of JV, joint venture, it includes both foreigners and local Chinese. So that is a difference here. Again, it depends on your goal, depends on your current situation or long-term plans. The partnership, just like JV, the difference is in partnership, you have individuals, all right? Individuals coming together, starting a partnership company. The share structure, sometimes people ask, well, how much share should I hold in a JV? How much share in partnership? Government does not specify it. Of course, there are industries. There are certain industries, there are like specific requirements with regards to those industries that local company, for example, should be the majority partner and the foreign partner should be the minority partner. But generally speaking, like in a broader concept, there's no specific terms, okay? Like for standard cases like import and export company or manufacturing company, or let's say consulting company, the share structure can be flexible. You can decide it. You can own the majority of the shares, or you can be the minor shareholder. It's up to you. And single person company, again, part of this FICE concept, FICE category, can be started by one person, and then however, there is a risk of unlimited liability, as we discussed. Now, this is orange boxes here, as you can see. Let's first now discuss the red box here. As you can see, Hong Kong Limited company. Now, if you want to make your China business structure slightly complex, then we recommend starting the business from Hong Kong. Okay, that can be your mother company, and Hong Kong Limited company can then own your foreign invested enterprise in a form of WFOE, JV, partnership, or single person company. It can be the owner of this China enterprise, basically. Why? Because again, it depends on your specific goals, guys. Don't ask me why, because I'm going to give you a few examples. All right. One example is some people do not want to, some companies do not want to accumulate their income, the net profit in mainland China. They want to accumulate it in Hong Kong because of flexibility in terms of transactions there, in terms of like being able to transfer funds freely, because in Hong Kong there's no currency control, where in mainland China there is a currency control, meaning that every company has a limitation every year to work with foreign currency. And we actually, when we form a company for clients, we get this permission, this permit, foreign currency permit, it's called, for the clients. So usually banks also give you permission. It's like, starting from $50,000 a day all the way to a couple $1 million a day. But still you will have a limitation, okay, in mainland China. But in Hong Kong, it doesn't exist. So this is one example. Another example is in Hong Kong, it's a common law system. So some entrepreneurs, some companies, they prefer common law system when it comes to legislation. So they want to, take advantage of that. They want to maybe transfer their IP rights there or trademark, etc. So ease of doing business, to be honest. So for that reason, they start the mother company in Hong Kong, and then they start subsidiary companies in mainland China. Different reasons can be like, let's say, privacy as well, because in mainland China, it's literally Googleable. Like when I say Googleable, I mean you can search it on Baidu here in China. Baidu is the Chinese version, the most commonly used search engine here. So literally, you can Baidu any company, and you will, in seconds, you will find the shareholders and the executives of the company. It's a public data. In Hong Kong, it is also public data, but it's not so easy. Okay, for example, if somebody wants to find out who's the owner of the company, they have to go through certain checks, certain like filters. They cannot automatically search the owner of the company and find out who is the owner of the company and go after them. It is still possible. Don't take me wrong. It's just you have to contact the registrar's office, and then you have to make an inquiry through them, basically. And usually it sometimes costs as well to get more details about the company in Hong Kong. But still, it's still a public data. It's not secret. Still, compared to mainland China, it's got a few layers of protection. And of course, in Hong Kong, banking system is one of the best in the world. We discussed this many times before. However, opening a bank account for your Hong Kong company, unless you have staff there, full-time staff and physical office, it's nearly impossible. But once you open a bank account in Hong Kong, company bank account, then it's literally one of the best banks in the world. Okay. Now, that is Hong Kong. If you want to add to the puzzle here for your China business structure. Now, let's focus on this blue kind of oval shape, which says Cayman Islands Trust or Holding Company. We have clients, usually from jurisdictions like, let's say, USA or Brazil, where the inland revenue there, they tax global income of their citizens. So for such clients, sometimes it's the privacy is extremely important. So what they do is basically they set up a limited company or trust, a holding company in Cayman Islands because of the secrecy again. The shareholders of the company, the owners of the executives of the company are not publicly available. It's not a public data. So then they're going to use the same company to create a Hong Kong limited company. And then Hong Kong company is going to create the China subsidiary. As you can see here, the whole structure becomes slightly even more complex, but it is a very common structure that most of the companies use. I think and I hope really this whole explanation makes sense. Once again, I would like to say that on the internet, on Google, when you find something called FICE and bunch of agencies, old agencies, talk about FICE being different from WFOE, excuse my French, but that is all bullshit. That is all bullshit. We form companies for clients on a daily basis. We work with the company registrar in China directly, like literally directly. We don't have any middle Chinese companies there we go through. So when you approach the company registrar, you don't tell them that you want to start a FICE because it doesn't exist. It's just a category name. It's not a company structure once again. But FICE is used, this term is used to refer to these types of companies, WFOE, JV, partnership, a single person company. Now, based on your business structure, based on your plans, not a structure, maybe long-term plans or your current situation or even, your requirements, you can choose from these four types basically. Either WFOE 100% owned or JV, maybe if you're going into joint venture with a local company or some other company. And then partnership, if you want to go into partnership with a local person. Now, another follow-up question might be like, okay, depending on this specific structure, WFOE, JV, partnership, a single person, are there any benefits? Right? This is a very common question as well. Yes, there are some benefits. For example, JV, when you have the majority partner, Chinese majority partner in the JV, certain industries will become available for you. I cannot list all of them right here. For example, let's say getting international transportation license that we discussed before in many videos. Getting international transportation license, meaning like international cargo license, usually it's very, very easy when you have a local partner. It's extremely easy because this type of license is not automatically available for foreigners. You can, but you need to go to certain regions where it's available. So in whole, like across China, all the cities, they are divided into certain regions, economic zones. And then all these economic zones, they are divided or assigned to different categories of businesses. So local people, when they own the majority of the company, it's easy for them to kind of get this kind of licenses, international transportation license, compared to foreign companies or foreign individuals. So there are some industries, yes, it makes easier to go into partnership, to go into joint venture with local companies. But you need to tell us what sort of business you want to start. And then we're able to tell you, okay, either JV or partnership or WFOE. Because for WFOE, if the business you're going into, in China, it doesn't have any restrictions, why would you want to partner with a local person? It doesn't make sense. Maybe for local staff purposes, but that local staff you can easily hire yourself directly. It doesn't have to be joint venture or partnership just because you want to have local people's assistance here. In the case of like different countries, maybe the most common example is Indonesia. Again, bunch of all these agencies, they keep pushing that local partner is mandatory because of the local language and culture, etc. None of that is true. As a corporate consultant, I really recommend going into partnership with a local company or a person only if you have specific goals or specific business plan and you are getting some benefit, not culturally and not like language wise, because language and culture, this can be provided by a local staff. You don't have to give them share of the company. You don't have to give them the chunk of the company. It literally doesn't make sense. It's just a way of the agencies, so-called like consultants, to push their services into you. Like they provide silent partner. They provide you with silent, so to speak, nominee director or nominee shareholder, etc. That is, of course, to push the service and then to get your money. That's it, guys. So when you, again, coming back to China, you don't have to partner with local company. You don't have to partner with the local person unless, of course, you have such goals. Because there are some, like I explained, the international transportation license, or there are some industries like in manufacturing, maybe you want to get into some mining, etc. Maybe for those strategic purposes, you might have to partner with a local person or company. But generally speaking, for all these general categories, let's say import and export, business consultancy, IT consultancy, even manufacturing of general like machinery, spare parts, engineering company, let's say gym, even in some cases like hospitals or healthcare, etc. You don't have to go into partnership, because these are some of the high-tech businesses. These are some of the encouraged industries in China. If you can afford to invest a lot of money, required capital, you can own the company 100% and then hire a bunch of staff here locally. Let them handle the culture part. Let them handle the language part. Right? I hope it does make sense. If any questions, guys, as usual, you're welcome to leave first of all in the comment section below, or you would like to talk to me in person, book a call on our website. You can see the link on the screen as well. It's through Calendly, which is available on our website as well. And then, of course, go ahead and send your emails. We try our best to actually reply to emails as soon as possible, but due to the large number of inquiries on a daily basis, sometimes there might be some delays. So apologies for that in advance. Thanks for watching. See you guys in the next one.